Very good morning, everyone. So let's start with the practice session for the total income questions. So this is from your study material. This is page number 9.30, the last chapter, computation and optimization of total income. So question number one is easy, so I'm not taking it. Question number two is more related to residential status question. Let us read it out. So question number two says, Miss Charlie, an American national, so she is not an Indian citizen, an American citizen, got married to Mr. Radhe of India in US on 2nd of March 2024. She got married and came to India for the first time on 16th March 2024. So this is the first time when she came to India, and she is not an Indian citizen. She left for US on 19 September 2024. Okay, she went out on this date. She returned to India again on 27th March 2025. While in India, she has purchased a showroom in Mumbai on 30th April 2024. Okay. So she came again on this date and she purchased a showroom in Mumbai, which was leased out to a company on rent on of rupees 25,000 per month from 1st May 2024, and she has given it on rent from 1st May 24. So 1st May 24, so we can see that in our year of previous year 24-25, from May onwards, she has let it out. That is for 11 months. She had taken a loan from the bank for purchase of this showroom, on which bank has charged interest of 97,500 up till this year. So up till this year, bank has charged this much interest also. So this would be the house property income. Anyways, even if she is non-resident, let's say, so this income is arising in India because she has an asset in India. So this would be a house property income, and she has leased it out also. And this expense would also be allowed interest on the loan for purchasing of this property. She had received the following cash gift from her relatives and friends during 1/4/2024 till 31st March 25. So she has received some gifts also. Okay. From parents of husband. Okay. Husband's parents. So you understand that in IFOS, whenever we receive gifts, so there are the definition of relative is quite broad enough. And whether you can receive the gift from the husband, yes. Whether we can receive the gifts from our parents-in-law, mother-in-law, father-in-law, the answer is yes. So it is actually covered under relative. So here, whatever is the amount, we will not be making it taxable. It is an exempt amount. So this is an exempt income. From married sister of husband. Okay. So can we take it from the sister of husband? So if you remember, the individual can take the gift from his parents, his brother and sister, and even for the spouse. Even for the spouse, we can take it from the parents of the spouse also, and from the brother and sister of the spouse also. So this person is getting the gift from the spouse sister or spouse brother. Yes, spouse sister is there in the relative definition. So this would again be an exempt income. It would not be taxable. From two very close friends of her friend. So if you are receiving from the friends, friends is not relative. And how much you have received? 1,51,000 and 21,000. We understand from other people if we receive it. And if the aggregate of all the cash gifts, cash gifts means monetary gifts, if the aggregate exceeds 50,000 rupees, then we have to make it taxable. So in this case, they are receiving from the friends. So this would be 151 and 21. This would be 1,72,000. This would be taxable. This would be a taxable income. Now let us see. And she received the following gifts during her stay in India. Now, determine her residential status and compute the total income chargeable to tax along with the amount of tax liability on such income if she opts out of the default tax regime under 115 BAC. So what is the first question they are asking? They are asking us to compute the residential status of the assessee, the total income of the assessee, and if they are not opted out from the default tax regime, so optional regime. So let us see that how the residential status needs to be computed. Now, we understand that she has a Mumbai income, and Mumbai income would be how much? The GAV. See, we are not being given the information of the municipal value, the fair rental value, standard value. So expected rent is not given. So only the actual rent. And generally, I always tell you that 90% are the chances that only actual rent would be given in your examinations. So that will become your GAV. So this income is arising in India, Mumbai income. And how much is the rent is for 25,000 rupees. So GAV will become 25,000. And because it is let out for 11 months only, so the actual rent is for 11 months, 2,25,000. So this would be GAV minus municipal taxes paid. So they have not given any information regarding the municipal taxes paid. So it is 0. So this would become my NAV also. And from NAV, we will give 30% of the standard deduction. It would be 67,500 would be the standard deduction. And interest on borrowings also. And if this is a let out property, whether we are following optional regime, whether we are following default regime, it is always available. So in this case, there is no issues. Even if we are following optional regime also available everywhere. 97,500. So house property income is 60,000 is her house property income. Whether she is resident, non-resident does not matter. This income would always is arising in India. Now, the second thing is that now let us see the residential status. So we know that the residential status of the individual depends on the basic conditions. The basic conditions would be that you should be here in India for 182 days, or you should be here in the previous year 182 days, or the second condition is in the previous year 60 days and the last 4 years is 365 days. And for some assessee, we don't take the second condition. But what is the common thing in those assessee? They are Indian citizens, or at least a person of Indian origin. So we understand that there are 3 exceptions where we don't take this condition. One is if you are an Indian citizen, crew member of an Indian ship, she is not there. So second is that if you come to visit, you are an Indian citizen or person of Indian origin, if you come to visit India. So she came to visit India, but actually she is not a Indian citizen or person of Indian origin. Correct. So that condition would also not be applicable. The third condition is if you are an Indian citizen and if you are moving outside India for employment purpose, that is also not the case. So she is not falling under any of the exceptions. So we can see both these conditions. Any one of them would be satisfied. Then we are okay to make her resident. Then once she will become resident, then we will see ordinary or not ordinary. So let us see that how many days she was here in India during the previous year. So she came for the first time on 16th of March 2024. So we need the number of days in the previous year 24-25, right? So our year is starting from April 24, 1st April 24. But she came in India last year only, 16th March 2024. So before this year, she was here in India. So it means, and she went out on 19th of September 24. So I can say that during this period, although she came few days before also, but during this period, because this period will start from 1st April 2024, and she was here till 19th of September. Till 19th of September 24, she was here. And she again came back on 27th March 25. So 27th March 25, and we have not been given the information that when she went back. So we are assuming that when she came on 27th March 25, so at least she was here till the end of this year. So it would be 31st March 25. So these are the number of days. Can you calculate how many days are we are having?
177 days.
177 days in total. Okay. So 177 days you can easily calculate, and you understand the date of arrival and the date of departure shall also be included. So we will include 19th September also, we'll include 27th March also. So you are getting 177 days. Okay, I'm not calculating. I think that It's correct, 177 days. So she is not satisfying this condition. She is not satisfying this condition. We can check the second condition also for her. At least you should be here in India for 60 days in the previous year, which she is. But in the last 4 years, it should be 365 days. So in the last 4 years, she was there in 365 days. The answer is no, because the first time she came just few days back. So she was not here in India for 365 days in the last 4 years. So this condition is also not satisfied. So we need to determine the residential status. We can say that this person is a non-resident. Correct. So the first answer would be non-resident, and compute the total income. Her house property income would be 60,000, and her IFOS income would be.
House property gross annual value is 2,75,000, sir.
Is it? Okay. Correct. It's 11 now. 2,75,000.
82,500 standard.
82,500. Correct, Sugandha. And interest was 97,500.
95,000.
95,000. Correct. 95,000. And IFOS income would be 1,72,000. That is the gift. So 51,000 is not an income, 11,000 is not an income, 172,000 is an income. So 95 plus 172 is 2,67,000. And we need to compute the taxes also. And taxes, you can compute that the limit, she is following optional regime. So 0 to 2.5 lakh nil, 2.5 lakh to 5 lakh, 5%. You can calculate the taxes. Whether she is eligible for rebate also. 87A, the answer is no. 87A is only for resident individuals. So this person is not a resident, she is a non-resident. So 87A rebate would not be there. So she has to pay taxes. There would be little taxes. How much it would be? On 17,000 she has to pay tax. 850 plus 4% says. So 884 would be the taxes that she has to pay. But there would be no rebate because 87A is only available for individual resident. Then they are asking, would her residential status undergo any change, assuming that she is a person of Indian origin and her total income from Indian sources is 18 lakh and she is not liable to tax in US? Okay. So they are now telling me that what would be your answer if her Indian source income other than foreign sources, that her Indian source income is 18 lakh rupees. So we understand that there is a special provision that when your Indian source income is more than 15 lakh rupees, then also you can become a resident because of the special provisions. And they are saying that she is not liable to tax in US. So it means we can say that she is not liable to tax in any country. Then we have a very special provision. If you are not liable to tax in any other country, then
resident,
you can become the special provision can be applicable, but that special provision is applicable. So we understand that we have two special provisions. Special provision number 1 says, and special provision number 2. Let me discuss the second special provision. It says that if you are not liable to tax in any country, provided you should be an Indian citizen, not even person of Indian origin. No, you should be an Indian citizen. Then only this condition can be applicable. If your Indian source income is more than 15 lakh, you are not liable to tax in any country. So her Indian source income is more than 15 lakh. She is not liable to tax in any country. Okay. So these two conditions are satisfied. But the thing is that she is not an Indian citizen. It's written that assuming that she is a person of Indian origin, she is not an Indian citizen. So this special provisions would not be applicable on her. So we can't make her resident. Second thing, this provision says that if your Indian source income is more than 15 lakh, provided either you are an Indian citizen or person of Indian origin also. So please note the difference. In the first special provision, you can either be Indian citizen or person of Indian origin. Got it? But in the second one, you should be an Indian citizen only. if you are not liable to tax in any country, then you should be Indian citizen only. So that provision is not applicable to her. Now, this provision can be applicable because this provision says that if you are an Indian citizen or even Indian of or a person of Indian origin. So she is a person of Indian origin in this part. And her total income from Indian sources is also going above 15 lakh. So this special provisions can be applicable. What does the special provision says? That you should be in India for at least 120 days, which she is, 177 something you told me. So it says that the first condition is 120 days, or either you should be here in 182 days, first condition. Second condition, 120 days plus 365 days in the last 4 years. But in the last 4 years, she is not there for 365 days, right? This first condition, this says at least 182 days. She was not there in 182. She was there for although 120, but 365 she was not here. So she is not able to satisfy this condition also because of this 365 days. So these special provisions could not be applicable on her. So still she will be a non-resident in this question as well. So I'm not doing it. I believe that you are able to understand this residential status. Everybody got it?
Yes, sir.
Okay. Let us take the third question. It says, Dr. Niranjana is a resident individual aged 60 years. She is running a clinic in Surat. Okay, she is a professional aged 60 years, senior citizen. Her income and expenditure account for the year ending 31st March 2025 is as under. So income and expenditure account is same as P&L account. It's not receipts and payment account. It's income and expenditure account, same as P&L account. So let us see the expenses. So the expenditure contains medicine consumed. Medicine consumed because she is a doctor. So I can say that this is her business expense, professional expense. Staff salary. Okay, this seems to be a business or professional expense. Clinic consumables. That's okay. Rent paid. If it is for the business purpose, professional purpose, though we are okay with this rent paid also. Administrative expenses, we are quite okay. Amount paid to Scientific Research Association approved under Section 35. Now, whether it is allowed or not, so it is there in Section 35 that if you are paying amount to a Scientific Research Association, please tell me whether it is an in-house research or an outside research. It's an outside research because they are saying that amount paid for Scientific Research Association. It's an outside research, correct? So if you are following default regime, then it will not be allowed. But if you are following optional regime, then it can be allowed. Because you understand, in PGBP, outside research is only allowed in default regime, it's only allowed in optional regime, not in default regime. Let us see what the question is asking from us. The question is asking from the above, compute the total income of Srimati Niranjana for assessment year this under the default tax regime and optional tax regime as per the normal provisions of that. So they are telling us that please compute the income under both the regimes, default also and optional also. So whenever I have told you previously also that whenever we get these types of questions where we need to compute the income as per both the regimes, and if it's a total income question, then always calculate by one of the regime first. Don't do it like this, that in one column you are doing optional, in one column you are doing default. Don't do like this. If it's a total income question, let's say if it's a small question, just of one particular head, let's say it is house property, let's say it is salary or any other head. If it's a small question of 5-6 marks, then you can do this like this, one column for optional, one column for default. But if it's a total income question, I'm talking about the 15 marks question, which you will get in the first question in your paper. So that should be done. Either just take one of the regime first. Let's say if you are taking default, just calculate it by default or optional, as whatever you are taking, calculate by that, right? And after that, whatever you have done, now when you will be calculating the income as per the other regime, let's say for example, you have calculated by optional regime first, calculate everything. Then when you are going for the default regime, just pick the GTI of this part 1. Part 1 means, let's say, optional regime GTI, and just adjust that GTI. So you don't have to do everything entirely again. So you have to just adjust your GTI. So we'll be computing by one of the regime. Either you want me to compute by default or optional, anyone we can pick. And then we will take that GTI as a base for the second type of regime, and we will be adjusting our GTI. Okay. So we have to follow both the regimes. So we understand that if we are starting with the default regime, let's say, so this is not allowed, or if we are starting with the optional regime, so this is allowed. Okay. These are the certain expenses. Let us see what is there in the income side. So income side is consultation and medical charges. This amount, this is normal business income. Income tax refund, principal 5,000, interest for 450. Please tell me, what do you do for this income tax refund? Income tax refund is an income or it is not an income?
Not an income.
So income tax refund is not an income, and
Interest on income.
interest on income tax refund is an income but covered under IFRS. So anyways, this amount, out of this amount, it is not PGBP for sure. So when you will be computing your PGBP, so this is should be deleted from here because it is not your PGBP income. And then where you should take this, you have deleted from PGBP. Now where you will be taking it? You will be taking it in your IFOS, but only the interest portion. Only the interest portion you can take. 5,000 is not an income. Because you understand, income tax is not allowed as an expense. If income tax is an expense, it is not allowed. We will not consider this as an expense. And if we get it back, we never consider this as an income also. Okay. By dividend from UTI, if you get a dividend from UTI, so this type of income is a IFOS income. It is not a PGBP income. Winning from game show on TV, net of TDS 15,000. So this is again an IFOS income. So we will delete it while computing our PGBP, and we'll be taking it in IFOS. And in IFOS, when you will take it, so you will take it at the net value or the gross value. You all know that we will be taking at the gross value. Correct. By rent, 27,000. So they have not mentioned what type of rent it is. So let's say if nothing is mentioned, it can be considered that it is a rent for a property. So it will go to house property. Or if it is rent for, let's say, machines, etc., then it will go to IFOS also. So it depends what kind of rent it is. But yes, this is some other income. So it is not PGBP because her business is that she is a professional doctor. Rent paid includes, so they are talking about this rent paid. Rent paid includes 30,000 paid by check towards rent for a residential house in Surat. So they are saying that out of this 90, 30,000 is her personal rent. So it's her for a residence which she is paying in Surat. So 30,000 will not be allowed from the rent paid. Clinic equipments, the opening value is this, and she has acquired on 7th December 2024, 2 lakh rupees. So why they have given this information? To compute the depreciation. So the opening value of the equipments was 5 lakh, and she has acquired 7 lakh on 2 lakh rupees on 7th December 24. So you understand, if clinic equipment, the rate of depreciation is how much? Plant and machinery, general rate is how much? 15%. So on 5 lakh, you will apply 15% depreciation, and on 2 lakh, you will apply 15%, but that is for half, 1 by 2, 7.5%, because it is acquired, and we will assume that it is put to use also on the same date. So it is acquired on 7th December. You will compute the days, you will get less than 180. So it would be half depreciation over here. Now, have they given depreciation in the expenses side? No, they have not given any depreciation. So you will be consider this depreciation. Have they been given any depreciation in their P&L account as per the book? So we will not consider that depreciation. We should consider this depreciation. Since in this question they have not given the depreciation over here, so we'll simply compute this depreciation that will be allowed. So 5 lakh into 15% would be 75,000, and 2 lakh into 15% and half, it would be how much? 15,000. So total would be 90,000 is the depreciation on this equipment. So this you will be going to allow. Everybody's okay till here?
Yes,
Yes,
sir.
sir.
Am I going too fast, or you are okay with this?
Okay.
Okay with
Okay,
this.
sir.
Okay. Third, rent received relates to residential house property situated at Surat. So rent received. So they are now telling me that this rent received relates to residential house property situated at Surat. Gross annual value 27,000. Municipal taxes of 2,000 paid in December 24. So 27,000 minus municipal taxes paid, will get the NAV. 24A, 30% deduction. 24B, if there is any interest on loan, that will deduct, and we'll get the house property income also. So this point is regarding house property income. But one of the important point they are saying is that if you will read the last line, they are saying the municipal taxes of 2,000 paid in December 24 has been included in the administrative expenses. So 2,000 is not my business expense. It is a house property expense. So this assessee has debited this 2,000 in the admin expenses. So 2,000 would be disallowed from here. So 2,000 is not a business expense. It's related to house property. Okay. So she's paying rent also. She's paying rent because here they have told me that she's paying rent where? In Surat, and she is also receiving rent also of one of the property. She received a salary of 7,500 per month from Full Cure Hospital, which has not been included in the consultation and medical charges. So she has received a salary also 7,500 per month, which is not in the consultation charges. Consultation charges were here. So they are saying that she has received a salary also from some hospital, and she has not taken it in her income and expenditure account. In her penal account, she has not taken. That's okay. If she has not taken, that's pretty good enough, because that is a salary income. It should not be taken in PGBP. So it's good that she has not taken, but please, you have to make it as a salary income. How much you will make? 7,500 per month into 12. That would be 90,000, would be salary income minus standard deduction. So it depends which regime you are following. Optional 50,000 deduction and default 75,000 deduction you can give. So this is my salary income. Niranjana availed a loan of 5,50,000 from the bank for higher education of her daughter. She repaid principal of 1 lakh and interest thereon 55,000 during the previous year 24-25. Please tell me what you will do with this information. You have to tell me what you will do with the information which is given in the 5th point. She has availed an education loan for her daughter. So we understand that first of all, this is not a business expense, and she is not saying that it's a business expense also, but she is saying that she has taken a loan. So we understand that if you take a loan and there is an interest, so 80E deduction is allowed under optional regime. So this is just for 80E purpose. They have given this information that she has availed a loan of 550, and she repaid principal. For principal, we don't give any deduction. For principal repayment, it is only for the housing loan we can take 80C. That is for the house, that too for purchase or construction. That's it. Even for repair, if we have paid any principal repayment, that is not allowed. For reconstruction, not allowed. Only and only for acquisition, that is purchase or construction, it is allowed. For housing loan. Otherwise, principal repayment of any loan is not allowed. So you will not be allowing this 1 lakh rupees. But this 55,000 is the interest that you will be taking in 80E, provided when you are following optional regime, not in default regime. You understand, in default regime, this deduction is not available. She repaid 1 lakh rupees as a tuition fees, not in the nature of development fees donation to the university for full-time education of her daughter. So she has paid a tuition fees. So we understand it is for the full-time education, because we understand for part-time it is not allowed. So for full-time education, for school tuition fees, for the college tuition fees, for any other higher education recognized in India, 80C. See, 80E loan can be taken for outside India education also, but 80C deduction of tuition fees, the institution should be there in India, and that too for a full-time education. School and college is included over there, and it should be tuition fees, not any other transportation fees, not any other development fees, etc. So they are actually telling me that it is not in the nature of development fees, etc. So we are okay with this. So 1 lakh rupees, we will give the deduction of 80C, but that too under optional regime, not in default. An amount of 28,000 has also been paid by check on 27th March 2025 for her medical insurance premium. So medical insurance premium, tell me where we'll get this deduction. For medical insurance premium, 80D. So this is deduction under 80D. We'll get this deduction. 28,000, can we get it? It's in 80D. There are two categories for self, spouse, and children, and that too dependent children in 80D. So it is 25,000. For parents, it is 25,000. But if the parents are senior citizen, then 25,000 will be increased to 50. And let's say if the assessee himself or the spouse is a senior citizen, then also 25,000 will be increased to 50. And in this case, this assessee is a senior citizen, 60 years of age. So she can get this deduction because up to 50,000 is available to her. From the above, compute the total income of Srimati Niranjana for the assessment year 25-26 under the default tax regime and optional tax regime as per the normal provisions of that. So we need to compute her total income. So which one we should opt first, guys? Anyone we can opt? Which one would you like to opt?
Optional.
Optional. Okay. Everybody quickly with me. This is question number 3. Computation of total income of Mrs. Niranjana. Assessment year 25-26. And we are following optional regime. Okay. So total income questions, we have done so many questions in the past also. And I always tell you that in total income questions, try to make it at a higher level. So let's say, for example, there is any calculation in any particular head. There is a long calculation in any head, generally PGBP. So try to make the working note of PGBP. And let's say for IFOS, for house property, for salary, if the calculation is not that much, you can accommodate that in 2 or 3 lines. Then there is no need to make a separate working note. So first, we should always, whenever we will start the total income question, we should always see that under which head we are getting income or under which head we are not getting income. So we have 5 heads: salary, house property, PGBP, capital gain, IFOS. So please tell me under which head she is having income or under which head she is not having income. So salary, she has income, we have seen, but it's a very small calculation. So we'll not make the working note for salary. We'll do it right here. House property, she has an income, again a very small calculations. So we'll not make a working note for house property. PGBP, she has income, but it needs a little calculation. So we'll make a working note for PGBP. Capital gain, she doesn't have. And IFOS also, there is a very little. So we have all 4 heads except capital gain. And for PGBP, we'll make a working note. Let us start with this. Income under salary. So we have been given that 7,500 she is getting per month into 12. So 90,000 she is getting. And there is no other salary income which is mentioned in this question. So this is the only income. So this is our gross salary. And we understand that we will give the standard deduction. And since we are following optional regime, we'll give the standard deduction of 50,000 over here. And a salary income will be 40,000. Everybody is okay with this? The second is income under house property. So gross annual value, they are saying that she is getting a gross annual value. They have already given 27,000 for this property, minus municipal taxes paid. Only municipal taxes which are paid during the year. So if you have paid the many municipal taxes after the year, so it will not be allowed in house property. In house property, municipal taxes are allowed only on payment basis. So whatever the payment you have made during the year only, correct? So 2,000 she has made the municipal taxes. So our NAV would be 25,000 minus 24A. If you don't remember 24A in your examination, but I think that now you will be able to remember also. If you don't remember, forget about the section number. Simply give standard deduction 30%.
7,500.
Correct. And 7,500. And there is a loan also. So there was no. There was loan related to, not for the property, it was related to education. So there was no loan as such. $18,500, $17,500. This would be the house property income. Then PGBP. For PGBP, we'll make a working note. 1. Then we have IFOS income also. So whenever you have to see the IFOS income, it is good idea to see the credit side of your income, P&L account. So if your credit side in your P&L account would be consultation charges, this is not IFOS. Income tax refund is not IFOS, but interest on income tax and refund of 450 is IFOS. Interest on income tax refund 450 is your IFOS. Do we have any other IFOS? Dividend, that should be gross. So it is already gross, 10,500. Then we have winning from game show, 35,000, but it is net of TDS 15,000. So we have to take it the gross value before TDS. So before TDS, so you have to add back the TDS.
50,000.
This is game show. So 35,000 plus 15,000. 50,000. So this is mainly your income of IFOS. Rent is not IFOS here. Rent, they have already mentioned that it's for the house. And just see if there is any IFOS anywhere else in the information. So this is regarding rent paid, this is depreciation, this is rent received, this is salary, this is interest on loan, tuition fees, and this is medical insurance premium. So there is no other IFOS income. So possibly 99% you will get your IFOS income from the credit side of the P&L account. If there is any other IFOS, it might be sitting in your information. So just give 10 or 20 seconds to look at your information, whether we have any IFOS income or not. So this is 50, 60, 60, 950, 950, correct?
Yes, sir.
Now, we will get our GTI, gross total income. So once we would be calculating our PGBP, then we can fill up the gross total income. So let us now make a working note for our PGBP. So you can use your next page to make a working note. One, PGBP. So how we do PGBP, you all know that we have 4 steps. We start with the net profit as a P&L account. First step is net profit as a P&L account. Second step is expenses side. Third step is income side. And fourth step is your information, right? So in your P&L account, first step, you start with your net profit. If it is a net loss, start with that, with a negative figure. Step 2, look at your expenses side. Any expenses which is allowed, we are okay with it. Any expense which is not allowed, we will add it back. Then you will see your income side. Any income which is of PGBP, we are okay with it. Any income which is not of PGBP, we will disallow. We will subtract that. Correct. So first 3 steps will take care of a P&L account or income and expenditure account. And the fourth step will look at your information. So net profit as per P&L account. P&L account or income and expenditure account, whatever you want to call it. So it is 4,40,400. Now we will see our expenses. So I'm not seeing my information as of now. I'm just seeing my expenses, right? So medical consumed, we are okay. Staff salary, we are okay. Clinic consumables, we are okay. Rent paid, I understand that out of this 90,000, 30,000 relates to my um, personal expense. So we can disallow this. So if you want to disallow it right away, you can do it. Otherwise, if you want to disallow with the information step, we can do with the information step. So let us do with the information step. So we are okay with it. Admin expenses, we are okay with it. Amount paid for Scientific Research Association, we are okay with it because we are following optional regime. So we can allow this also. So expenses side, generally we are okay. I know that there is some information regarding some of the expenses that will be disallowed, but that we will be taking care with the fourth step in the information part. So step 2, we are almost okay. Step 3 is my income side. So we will see that if there is any other income other than PGBP, we will subtract that. So this is a PGBP income. Then we have income tax refund. It is not a PGBP income, and neither income tax refund is neither an income. 450 is IFOS, but yes, the entire amount is not PGBP. So you will subtract less income tax refund with interest and interest 5450. You will subtract it. Dividend from UTI 10,500. It is not a PGBP income. UTI dividend. $10,500. Then winning from game show. Whatever is written over here, please delete it. Sir, should we delete at the gross value? No. See, in your penal account, what is the amount which is sitting incorrectly? 35,000. So you will just tell this 35,000 go away. So you will not subtract 50,000. See, 50,000 is something which is your before TDS, that will go in your IFOS. So at the time when you will be taking this into IFOS, then you have to take 50,000. But otherwise, this right now, what amount is disturbing your P&L account? So your P&L account is getting disturbed with this 35,000. So whatever the disturbing element is, just get rid of it. So the disturbing element right now is 35,000. So this is a lottery or game show. It is not a PGBP income. And then the rent also, it was not a PGBP income, 27,000. So we have done with the step 3 also income side. Now step 4 is the information. So we'll see that if there is any information which is relevant for PGBP. So rent paid includes 30,000 rupees, which is for a residential house. Now we understood that out of this 90, this rent paid, 30,000 is a personal expense. So we'll disallow that. So out of 90, we are not okay with 90. We are okay with 60, but we are not okay with 30. So 30,000 is creating a problem. So we will delete this expense, and you understand if we'll delete an expense, our profit will increase. So we'll add back this. Rent paid, which is personal. So whenever I will be deleting my expense, my income will be increased. So that is the reason we are adding it. Next, information, clinic equipment. So they are telling me about depreciation. Less depreciation under section 32. So it was 5 lakh. Directly can you can do it 5 lakh into 15% plus 2 lakh into 15% into half. So we already know 90,000 is a depreciation that will be allowed. If depreciation is an expense, it will be allowed. It will reduce your income. It will reduce your profit. Then rent receipt relates to residential house property. We have already deleted this 27,000. So we are okay that it is not a PGBP income. It is a house property income. But it includes a municipal taxes of 2,000 rupees, which has been included in admin expenses. So 2,000 rupees is sitting in your admin expenses, which is not a business expense. This 2,000 is a house property related. So we have already deducted in house property, but it should not be deducted from here. So we will add back this 2,000 rupees. Municipal taxes of house property 2,000. So we have incorrectly debited it. So we will say no, it should not be debited. So if it should not be debited, my profit will increase. Then she received salary which has not been included in consultation and medical charges. So this information is not disturbing my P&L account, and it should not come in my P&L account also because it is a salary income. She availed a loan that will go in 80E. She has paid tuition fees that will 80C, and 80D would be there. So this is the information which we have regarding PGBP. Everybody is clear on this, guys?
Yes, sir.
Yes, sir.
So how much it would be?
3,04,450.
2 lakh,
3,04,450.
3,04,450. This is PGBP. Everybody done?
Yes, sir.
So we'll take this PGBP there, 3,04,450.
GTA 4,22,900.
4 lakh
22,900.
22,000.
22,900.
Yes, sir.
Okay, so this is my GTI, 422,900 less
Deductions under
chapter
80C.
60 deductions. So we have 80C, that is the tuition fees. Is 1 lakh rupees. Then we have 80D, medical insurance premium, and she is a senior citizen. Therefore, 28,000 can be allowed. Maximum 50,000 can be allowed, but she has paid 28,000, so we are okay with 28,000. And 80E, that is interest on loan, on education loan. So it was 55,000. That we have already discussed. So this would be 2 lakh.
2,39,900.
This is the total income. So do we need to compute the tax liability or the total income only? Let us see. They were asking about just the total income. So they are not asking about the tax liability, so we'll not compute that. So we'll stop our optional regime here. Then we have to do with the default regime also. Everybody done till here? Tell me.
Yes, sir.
Okay.
Yes, sir.
Good. Now, let us go for the default regime. So what we will do is we will pick up this GTI. In default regime now, we'll just pick up this GTI as a base. And we will do certain adjustments. So what are the adjustment, guys? So just look each and every head. Just look each and every head. That what should be the changes as per the default regime. So my first head was salary. In salary, there is a little change because standard deduction would have been 75,000. So we have given only 50. So we should give deduction of 25,000 rupees more. So in this, so we have to give a deduction of 25,000 rupees more over here. This is one change. House property, for let out property, there is no change. For let out property, there is no change in default and optional. So house property, there would be no change. In PGBP, there are only 3 changes in PGBP, remember. I'm not talking about this question. I'm talking in general. So in PGBP, there are only 3 changes. One is additional depreciation, which is not there. Second is 35 AD businesses, specified businesses. That is also that 14 businesses, hotel, hospital, etc. So that is also not there. Third is
Scientific.
outside scientific research. So that is there. So outside scientific research, we have not. We have actually given a deduction of rupees. How much was it? It was
1,50,000.
1,50,000 rupees. So we should not give this deduction. So this 1,50,000 deduction would not be available over here. Right. So this is an adjustment. So 25,000 we have to give the deduction, but 150 we have to take it back. And in IFOS also, generally there is no such differences. One of the differences is family pension. In family pension, you understand that it is 15,000 or 25,000 also. So otherwise, there is no such difference in IFOS also. So this is again, we are okay with it. So GTI of default regime, we will get after these two adjustments. And in default regime, we will not get ATC, will not get ATD, will not get ATE also. Because you understand in default regime, we can only get ATCCD2, ATCCH2, Agniveer scheme, and ATJJAA, new workmen. So let us quickly do it. It is just a 1 minute job now for us. So total income as per default. So gross total income as per optional regime was gross total income as per optional regime was
4,22,900.
422,900. $4,22,900. What will give for salary will give some extra deduction, standard deduction. So less excess standard deduction under salary. So 25,000 will give more deduction, will be subtracted. And in PGBP, we have already given the deduction of 150, which should not be there. So we'll add it back now. Add outside scientific research. 1,50,000 will add it back. So this is a GTI as per default.
Five
547,
lakh 47,900.
correct, 547,900 less chapter 6A. So 80C, 80D, 80E, simple, right? Not applicable. And this is 547,900. This is our total. Everybody got it?
Yes, sir.
Good. So let us keep it till here today. It's 8:30. So we'll continue tomorrow. We'll try to do some 2 questions more tomorrow of total income. Thank you so much, guys. See you tomorrow at 7:30.
Thank you, sir.